On the back of the UK election, whereas I'm sure you're all aware Labour secured a landslide victory, many of you may be wondering what it could mean for your pension savings. The initial reaction from the market was positive, as the result didn't come as a surprise, and markets generally appear to be anticipating a period of more stability with the new government in place. The next few months may see some changes in financial markets as the new government beds in, and while they ruled out an early budget during their campaign, we're likely to see more clarity over their plans emerging. However, any effects on markets are likely to be short-term. And remember, because your pension is invested over the long term, it gives you the best chance of smoothing out any of these short-term changes in value. It's also worth remembering that because your pension savings are likely to be spread across different types of investment, in different geographical locations, what happens in one country can be offset by what happens around the world. We call this diversification, or not putting all your eggs in one basket, and it helps to spread your risk. So let's take a look at what the next few months could bring. Over the longer term, we generally remain confident in the outlook for returns. We believe that equities or shares in companies will continue the positive growth we've seen globally in the first half of 2024. We will, however, be keeping a close eye out for any signs of economic weakness, particularly given the high values we're seeing in some markets and sectors, particularly US technology. Turning to bonds, the outlook is more mixed. While the rise in interest rates suggests better returns are possible as we look forward, variable economic news could increase volatility or sudden changes, both positive and negative. On balance, we believe that high-quality bonds will continue to play an important role in investment portfolios over the longer term. Higher interest rates have been challenging for the property sector, but with signs of rates starting to fall, that should change. Some areas of the property market are benefiting from particular trends. An ageing population, for example, may increase demand for retirement or care homes. Demand for more environmentally sound property has also remained high, particularly in commercial markets like offices. And again, this shows the importance of diversification within investment types. Turning to the economy more broadly, UK growth has been generally only flat over the first half of 2024. And globally, the International Monetary Fund, the IMF, is forecasting global growth of 3.2% for both 2024 and 2025, which is actually the same as we saw last year. More specifically, we've largely seen emerging markets doing better than that, and the more developed economies coming in below that growth figure. Some markets have been doing better than others. So, for example, the US has performed more strongly than the UK, and India has outperformed China. Many economies have continued to battle stubborn inflation, rising prices. While inflation has been starting to slow in many countries, it hasn't been as fast as markets expected it to be at the start of the year. And as a result, central banks like the Bank of England, the Federal Reserve in the US, haven't cut interest rates as quickly as expected. While unemployment has increased slightly in the UK, it remains relatively low, and consumer demand for goods and services has been fairly strong over recent months. Concerns about supply issues remain as a result of continued tension in the Middle East and the war in Ukraine. Politics will also continue to play a part in shaping the global economy. The UK general election may be behind us, but the US one is still to come, and the outcome of that currently seems less predictable. So, in summary, we wouldn't be surprised to see some short-term market volatility over coming months. However, this is unlikely to affect pension growth in the longer term, and central banks will continue to watch inflation closely and take decisions on interest rate changes cautiously. As ever, taking a long-term approach to your pension, making sure that it is diversified across different types of investment, will be essential to supporting you to secure a sustainable future.